Welcome everyone to today's technical analysis breakdown. The clash between Iran and Israel will test Trump's anti-war stance as the US president signaled a potential military involvement with scope to eliminate Iran's nuclear program. Well, in this climate, oil prices and traditional safe haven assets such as gold will remain on the spotlight. And interestingly, the US dollar may also attract flows as a defensive asset, particularly as long as the spotlight remains out of the US fiscal troubles and Trump's tariff headwinds. So how is this all shaping the charts? Well, at this video I have prepared my analysis on WTI oil, crude oil, gold, and the US dollar versus Swiss franc. So let's have a look first at WTI crude oil. As we can see, the market experienced a nice rally, an almost vertical increase to 77.74 from four-year lows. That increased optimism for a bullish reversal, and however, we saw the price failing to close above this resistance trend line from September 2023, which is currently under examination near 75.76. So although the rebound near this lower constraining line at 71.38 keeps optimism alive, the price needs a clear close above 75.76 and, more importantly, a break beyond last week's high of 77.74 to continue towards the 2025 high of 80.59. Then beyond that, I expect more increases towards the 84 level. That's been a key constraining zone back in July 2024. Well, if you look at the technical indicators, we can see that some caution remains because the RSI, the stochastic oscillator, are hovering near overbought levels. So that suggests that downside risks remain in play. If indeed the price fails to close above 75.76, then we could see reversal and another test near the 71.38 zone. Failure to hold here could extend the decline towards the 200-day moving average at 68.85. While lower than that, the 20-day moving average at 66.35 at the moment could also provide protection ahead of this tentative support line near 64. A break below this zone over here might send stronger bearish signals and shift the attention back to the downside. Now looking at gold, well, the precious metal has been losing momentum over the past couple of days after basically slightly surpassing May's high. If we look at the technical indicators, we can see that sentiment is weakening. All the indicators are pointing to the downside. However, the RSI is still above its 50 neutral mark, slightly though. And the MACD has yet to gain any direction, is still quite stable. So upside risks haven't really faded out, and but because the price has yet to close below this support line over here and the 20-day moving average, both seen between 3,380 and 3,348. So as long as we hold here, there's optimism for a rebound. If the price moves lower, then the 3,300 territory could next pose selling pressures, while lower than that, a more important barrier could emerge somewhere between 3,250 and 3,270. We can see that the upper bound of this bearish channel, as well as this longer term support trend line coming from the end of 2024, are both located here and could protect the market from a bearish continuation to 3,200. Now, in the event that the price pivots higher and successfully surpasses the 3,380 zone, I expect the price to extend its series of higher highs, likely reaching the 3,470 or even the 3,500 psychological mark. A successful penetration higher and back into uncharted territory could see the price rising as high as 3,600. Probably psychological mark could next pose the rally, and then beyond that, the next target could be the 161.8% Fibonacci retracement extension level of this downfall at 3,740. And finally, looking at dollar Swiss franc, the Swiss National Bank has just lowered interest rates to 0. It's lowered its inflation forecast as well, but as we can see, the Swiss franc has barely reacted. From a technical perspective, it's actually facing some resistance. The pair is facing some resistance around the upper band of this bearish formation at 0.82. So if we hold below this level, we may see a downside reversal, and in this case, the 0.8110 territory could come back under examination. This region is important because it includes this longer-term support line coming from the pandemic lows. So that will be closely watched. If it fails to protect the market, then the sell-off could stretch towards the 0.8010 and 0.8050 zone, where this double bottom pattern has been created around this territory. If the price continues lower, that would shift the outlook back to bearish, and in this case, we may see the next pause taking place somewhere between 0.7920 and 0.7850. And if we look at the technical indicators, well, we can see some signs of improvement, but the RSI is still below its 50 neutral mark, and the MACD is also remaining indecisive, just around its red signal line and below 0. So downside risks are still in play. However, it will be interesting to see whether the price will manage to overcome the 0.82 and, more importantly, the 0.8250 and 0.8295 territory in order to continue towards this resistance line at 0.8388. Nevertheless, for the pair to confirm this bullish double bottom pattern, the price should increase above the 0.8475 neckline. So in this case, a confirmation of this bullish pattern may reactivate fresh buying, likely driving the price towards the 0.8565 and 0.86 zone. So that's everything I wanted to share with you guys. The coming sessions might be quite interesting as geopolitical risks remain quite high in the Middle East. So we should have a great, safe trading session. And of course, we'll be back next week for more technical analysis updates. Thank you for watching and see you next time. Bye-bye for now.